Hello and welcome back to the Geordie Pig Investor channel, where we dive deep into the world of dividend investing to help you build a portfolio that pays you. In today's video, I'll be breaking down my InvestEngine portfolio performance for the past month, what went up, what went down, any changes I've made, and my thoughts going forward. Whether you're a long-term investor or just getting started with InvestEngine, this should give you some insight into how a diversified ETF portfolio behaves over time. My portfolio is currently split between my general investing account and my individual savings account. The reason for that is that up until last year, you could only hold one ISA at a time, which is my main portfolio over on Trading 212. However, since April 2024, the rules have changed and now you can open multiple ISA accounts, with the only condition being across all of them, you can't exceed that £20,000 contribution limit. So since that change came into effect, I have been investing £100 every single month into my ISA, and today I'll be adding another £100, so make sure to stick around for that. Over time, I do plan to move the funds from my general investing account across over into the ISA account, but there's no rush to do this right now, and it'll probably be something that I do in a year where I feel I'm not close to maxing out my limit, so that I can take advantage of maxing it out until that point, and then when I feel like I want to move this money across, I can do so. What makes this portfolio unique is that every ETF I hold is a factor ETF. For anyone new to the concept, a factor ETF is an exchange-traded fund designed to target specific investment characteristics or factors. And the reason for investing in these types of funds is that research has shown it can lead to stronger returns or lower risk over the long run. Some of the most common factors include value, which are stocks that are cheap compared to their earnings or assets; growth, which is companies growing faster than the market average; momentum, which is stocks that have recently performed strongly; you have quality, which is companies with solid balance sheets and consistent profits; and you also have low volatility, which is stocks that tend to be more stable and fluctuate less. Instead of simply tracking a broad market index, factor ETFs let you focus on strategies or styles of investing that align with your personal approach. In my own portfolio I'm sharing with you today, I think I've built a strong blend of factors I want exposure to. Now let's take a look at how these factors have performed in my portfolio for the month of August. Overall, last month was another green month, with the portfolio being up 1.4%. This helps build on the last few months, as my portfolio has now been in the green for 4 months in a row. And if we do compare my own portfolio against the S&P 500, we can see that the Vanguard S&P 500 was up only 0.68% in August, so I actually had a slightly better performance when comparing my own portfolio to the Vanguard S&P 500. If we do scroll down, we can see that my best performer for the month of August was the iShares S&P Small Cap 600, and it was the best performer by quite some margin, being up 5.41%. If you've been thinking about getting started with investing, this is one of the easiest ways to begin. I use Freetrade, a commission-free investing app that makes buying and selling shares simple and transparent. The platform is clean, user-friendly, and you can invest in UK and US stocks without worrying about hidden fees. And right now, if you sign up using the link in my description and deposit just £50 in your account, you'll get a free share worth anything between £10 and £250. Oh, and I might add that if you're unsure what to invest that £50 into, don't worry about it. You will still receive your free share even if you don't invest that money. It's a great way to start building your portfolio with zero risk on that first step. Check out the link below and claim your free share today. This ETF has now been my best performer 3 months in a row, which is pretty impressive, especially considering it spent quite a while in the red before finally now my position is overall in the green. The fund tracks the S&P Small Cap 600 Index, which is made up of 600 smaller US companies. That gives me exposure to a corner of the US market that I probably wouldn't invest in directly myself. For August, like I just mentioned, it was up 5.41%, which is a solid return. And as you can see on screen, the top 3 holdings within this one are the BlackRock Liquidity Agency at 1.1%. We then have Mr. Cooper Group at 0.8% and Kratos Defense and Security also at 0.8%. In terms of sectors, the top sector is industrial with quite a heavy weighting at just under 30%. You then have financial at 14% and property at 7.4%. A quick note of caution here, small cap stocks are naturally more volatile and less liquid than large cap companies, so they can be a bit more unpredictable. It's definitely worth keeping that in mind and making sure if it fits your personal risk tolerance. In my own portfolio, we can see that the iShares S&P Small Cap 600 is just under 15% of the overall portfolio, which is the same allocation as 2 of my other ETFs. I do have a heavier weighting towards a couple of my other ETFs, but overall, I really like what this fund adds to the mix. And the next best performer in the portfolio for the month of August was my X-Trackers MSCI World Quality ETF, stock ticker XDEQ. This ETF was up 0.89% for the month, and it tracks the MSCI World Sector Neutral Quality Index, which targets developed market companies with high quality fundamentals, things like strong returns on equity, steady earnings growth, and low debt. If we have a look at the top 3 holdings within this one, we can see that Nvidia is the top holding at 6.4%, Microsoft is second at 5.4%, and then that is closely followed by Apple at 5.3%. When looking at the sector breakdown, this one also has industrial as the top sector at 22.5%, but then it has technology in second at 20.6% and financials in third at 17.8%. And something you might notice within my own portfolio is that I do have stocks that will overlap between the ETFs. I don't mind this. In fact, I actually welcome this when it's companies I consider high quality. So if I'm doubling down on names like Microsoft or Nvidia or Apple, I'm more than happy to do so. If this ETF sounds interesting to you, keep in mind it's focused on high quality companies across developed markets, its sector and geographical diversification, and the fact it uses an accumulating dividend policy. As always though, it's worth making sure it fits your own goals and risk tolerance. The next best performer in August was my X-Trackers MSCI World Momentum, stock ticker XDEM. This ETF tracks the MSCI World Momentum Index, which focuses on large and mid-cap companies around the globe that are showing strong momentum. For the month, it was up 0.83%, so not a huge gain, but still in the positive. The top 3 holdings within this one are actually Broadcom at 4.3%, you then have Netflix at 3.6%, and Berkshire Hathaway at 3.4%. This ETF has nearly 2/3 of the entire portfolio in just 3 sectors. There are financials at 27.7%, industrials at 18.8%, and technology at 18.1%. This ETF also makes up 15% of my portfolio, the same allocation as a couple other of my funds. Momentum investing is all about chasing stocks with strong recent performance trends. From my experience, when the overall stock market is moving up, this fund can capture some really strong gains, but when the market does dip, the volatility definitely increases, so bear that in mind. Next up is the final ETF that was in the green for the month, and that is the Wisdom Tree Global Quality Dividend and Growth ETF, stock ticker GGRG. This one is a 25% allocation in my portfolio, and in August it was up 0.51%. The fund focuses on dividend paying companies in developed markets that also show strong growth potential and high quality fundamentals. The top 3 holdings within this one are Microsoft at 5.8%, Apple at 3.5%, and then you have AbbVie at 2.8%. What I really like about this one is the broader global exposure. It's not just North America. As we can see when we look at the region breakdown, it actually has over 22% in Europe excluding UK, and then also has 5.7% in Japan and 4.5% in the UK. Sector-wise, as we can see, the top sector is industrial at 23.4%. We then have technology at 20%. And financials at 11.1%. If you're someone who likes a combination of income and growth, then GGRG might be a really compelling pick. It gives you exposure to financially sound, dividend-growing companies across developed markets, which is a nice balance in any long-term portfolio. And finally, we've got my biggest holding in the portfolio at 30%, and ironically, it was the only one in the red this month. This fund is the UBS Factor MSCI USA Quality ESG ETF, stock ticker UC99. Quite a mouthful to say. The goal of this fund is to give investors exposure to high quality US companies that also meet environmental, social, and governance standards. It tracks the MSCI USA Quality ESG Low Carbon Select Index, which looks for companies with strong fundamentals while also keeping an eye on sustainability. The top 3 holdings within this one are all big tech names, with them being Nvidia at a massive 10.5%. We then have Microsoft at 8.8% and Apple at 8.4%. Interestingly, the sector breakdown has shifted quite a bit recently. It now has industrials making up a whopping 39.1% of the overall ETF. You then have technology at 28.5% and financials back at only 8% of the portfolio. So if we combine just industrial and technology, it makes up over 2/3 of the ETF at 67.6%. The reason I've made this one my largest allocation is because of its strong track record since inception. It's actually delivered an average annual rate of return of 18.9% since inception, including dividends, which actually means it's outperformed the S&P 500 over that time period. But of course, past performance doesn't guarantee future results, so as always, make sure to do your own research before considering it for your own portfolio. Overall, I'm really happy with the mix of holdings in my portfolio, and the goal here is just to continue to add my £100 at the allocations I have them set out to be. So without further ado, let's add that £100 for this month. And there we have it. Another £100 has been added towards my future, always making sure I pay myself first. I really enjoy making this series because it shows how powerful consistency can be. By simply adding £100 every single month, the portfolio keeps growing and it builds that healthy, long-term habit of investing. Remember, it doesn't matter if it's 100, 50 or even £10 you're adding to the portfolio. Investing whatever you can each month makes a massive difference over time. Wealth isn't built by timing the market, it's built by time in the market. Patience and consistency are what turn small seeds into lasting wealth. And that wraps up this month's InvestEngine Portfolio Update. If you found this video helpful, don't forget to give it a thumbs up and subscribe for more monthly updates, dividend news, and investing tips. Got any questions or want to share how your portfolio is doing? Drop a comment below. Thanks for watching, and as always, stay consistent, stay patient, and let your money work for you. Until next time, this is the Geordie Pig Investor, over and out.